Hello everybody. All right, so let's get right into this. It's the first of the month. Monthly candles have closed all over the place, and it's time to look at instruments which have been under my radar, having had alerts triggered during the past month. And now it's time to revisit them to see if we got to close above breakout or breakdown levels. And today we're going to look at CAD versus CHF, the Swiss Franc. So right now I have the 10-year graph for the that forex pair, monthly candles. And right off the bat, we could start by maybe drawing a descending line like this on the support, and then see if there's a parallel line descending channel. Not quite. It's more inclined. It's looking like maybe a falling wedge. Let's check it out like this. Okay, so we might have a falling wedge right here, and that's interesting. Falling wedges could be reversal patterns, often seen as a reversal pattern. And right now, on the past 2 years, since January 2015, 3 years, we seem to have a bottom rectangle tight formation here forming. So we have the larger trend, which is still down, but in a reversal pattern, falling wedge. And we have building up a sideways rectangle, which has been lasting many years, very tight range. So .72 to .77. This is very interesting. A breakout of a type pattern like this for that long would reach our target very fast. Targets would be, let's measure the height to the bottom, create a parallel trend line. You know what, I'm going to zoom in just a little bit, so it's easier. There we go. And move this a little to the left so we get to see some black space to imagine what the future could be. And yeah, all this black zone here, it helps you just visualize what the eventual pattern could be with having arrows, slant like that. But right now, this would be the target. Let's put in send alert. So it seems we have resistance here around the 78 level. So I'm just going to reset my alert here at this .78 level. And we have support identified here around the .72 level. Maybe set my alert right there right now. You see a few wicks above the breakout level. Since we're playing the monthly candles, well, all that noise, we avoided entering this on the past 4 months. There was some activity above, but always retrace back before the close of the month under that important resistance line, breakout line. Definitely, if we gotten on the weekly, would have probably been triggered into something and then triggered back out. Let's go see right now. Let's go see, just for curiosity, if we want 5-year weekly. And would we have played this? Remove the candle. There we go. And just zoom in. Whoa, there we go. And yes, you see, here we would have identified the support for the first breakout here. Resistance would have identified 78. Oh, candle closed above 78, even if it's not a very bullish candle. Could have entered this, and then after that, oh no, price action decides not to go up, and then would have been triggered out back here. So you see, that's noise. That's avoiding. I enter a lot less trades than I used to when I trade weekly, and but I avoid all these whipsaws, which are completely useless and counterproductive. So let's go back to the 10-year weekly and just finish up the analysis. Okay, so there's no confirmed breakout. I reset my alerts. I'll get back to this when the alert is triggered, and if we get a close in January or February above that breakout level, then oh, I zoom it out the other way. Sorry about that. Play. So our first target would be right there around the .83 level. I'm going to send another alert here. And what's interesting here is, and this also coincides with a congestion area here of some more resistance. But the real gem right here is a falling wedge pattern. The target is the height of the falling wedge. So eventually here, if we have intermediate targets for this pattern, the resolve, we get this target here. But the real target would be the retracing all the way back to the height of the all the way here, all the way to .98. So that's the real target long term. But first pattern I would play would be this one. We'll get back to it once that resolves, and that's about it. Nothing again to see here except keeping an eye out on for eventual breakout. And just to remind you guys, you could always go back to my Badcharts.com website and go check out my how-to and see how eventually, when we got the plus stock that we want to play, underlining equity or forex pair, how I apply that to my money management, and how we set the risks, and if we decide to go in or not. It's all there, pretty clear, but I can't wait to get an example where we could actually go through this and see how that pans out for us, how the process works out. All right, so with no further ado, see ya.